Welcome to Storyboard, and this week we are in conversation with Sir Martin Sorrell of WPP. What is on your agenda on this India visit? Is there anything specific?
It's kicking the tires. Now you're always about to launch into which companies are you going to buy? Is that your favourite question? To which the answer is the last person in the world that I would tell is you. But no, I think it's general. It's making sure we're doing the right things, seeing clients, seeing our people. Seeing government people where it makes sense. So really it's kicking the tires, making sure that we're growing organically as well as by acquisition. And our business here now is up to about $450 million of revenue. We have almost 10,000 people here now. I mean, we have a very strong presence here. Our agency is doing very well pretty much across the board. It doesn't mean we can't do better, of course we can. It means there's another half of the market to go. So it's good, it's very good. And as I've said to you before on many occasions, if all our countries were as good as India, then I could retire.
It brings me to my next question. We just saw WPP just posted its results for 2010, and we saw your revenues go up by about 7.3%. Quickly give us the analysis for what kind of, what were the factors behind that growth? Because I think you all were all pleasantly surprised with the way America or the US performed, isn't it?
Yeah, I mean, it was US and traditional media, so
yes.
You should be very pleased about that. Traditional media did well, which was a surprise. But in the context of the recovery, I mean, 2009 was so awful, brutal is the way we put it, that in a way 2010 wasn't that surprising when you really reflected on it. But traditional media came back. Maybe it was a bit of dead cat bounce, i.e. 2009 was so bad it had to get better. 2009 advertising as a proportion of GNP in the US reached a low we haven't seen since the mid-70s. Now, the numerator tends not to include a lot of the new media stuff, so it might be a little bit misleading, but directionally it was so. There were categories that came back, like autos, financial services, travel, hotels that had not been advertising that came back. I think clients, and somewhat more controversial clients, think of traditional media as more about brand building, new media perhaps more about price and promotion. You think it's true? I mean, the jury's out on that in its early days.
I think that's the way they tend to use it, even though that may not be the full potential of the media.
Maybe, but then the price of traditional media fell sharply, so the relative differential looked better. And Michael Gray, that before he left ITV, said commercial television in the UK was its cheapest for 10 years, and I think he was probably right. I think the most important reason is that you've got companies in the West, multinationals, sitting there with, I think it's $2 trillion in cash on their balance sheets, relatively unlevered balance sheets. And what they're doing is not investing in capacity and expanding capacity because the risk is too high. Because in the slow growth West, what they're doing is really investing in the brand to either maintain share or increase share. In the growth markets like India, they are investing in capacity because they know that GNP is growing at 8 or 9%. In China, they know that the 12th five-year plan is going to be at 7%, slight reduction from the 11th plan, but the 11th plan delivered 11.2. The Chinese always deliver, or most times deliver.
So Martin, are we out of the recession that we saw?
Well, if you describe,
in the developed markets starting 2008
in the
September.
Developed markets? Well, if I take WPP as a sort of emblematic of it, I mean, it maybe it may not be. The second half of last year, we got back to where we were. And the interesting thing is, from a cost point of view, I think most of our clients are getting back towards the level. There are some industries where that's not the case, but in many industries, they are back to where it was, and their levels of cost are lower. I mean, that Lehman weekend of September the 13th, 14th, 2008 had a searing effect on the consciousness of corporations as well as consumers. I actually think probably more on corporations than it did on consumers. And they will not take risks, particularly in slow growth markets. Now, the west of Europe, maybe excluding Germany, maybe excluding the UK, not England, but the UK in the longer term, or in the medium term, the Western Europe is going to have slow growth. The US probably will be faster growth than Western Europe, but still will not be as rapid as other parts of Asia, Latin America, Africa, the Middle East, and Central Eastern Europe. So you've got sort of three speeds of growth, where sadly the Japanese probably a fourth speed.
Yeah.
Although if there's any good that comes out of these terrible
is
events,
the stimulus that it will create to building, to regenerating.
Now, whether the stimulus changed the attitude, because Japan has been stagnant for 20 years.
I know it's relatively small in terms of what it contributes to WPP's overall revenues and business interests, but how concerned are you about what is happening in the Middle East?
Well, I think Japan, just put it in, if you go back and say what are the issues that clients are worried about, they're worried about the Eurozone contagion or sovereign wealth risks in Europe, which I think receded a bit, but they're still there. They're worried about the US deficit or lack of action on the deficit. And that probably won't happen until after the general election or the presidential election in 2012. And there are two things that have been added to it. One is Japan, which I think is more temporary, and there will be a stimulus, but the nuclear fallout has not been helpful, to say the least. The Middle East I find more troubling because it is, as you say, only about 1.5–1.75% of our revenue. It's about $350 million of revenue. But the thing that worries me is I know very little about it, and the range of possible outcomes are very
too
broad.
wide.
I mean, nobody knows, right? So you don't know which other regimes are going to be affected. You don't know where regimes have been displaced, what the new regimes are going to be, what their attitudes are going to be. You don't know who's going to be controlling what is basically the West oil supply through the Straits of Hormuz. You don't know whether it's orchestrated in any way. I mean, it doesn't appear to be, but it may be the orchestrators have been extremely subtle. So it's really tremendous uncertainty. Now, I've been to a conference at JP Morgan, and they said, if the oil price goes to 150, we have a problem. I think it's probably more psychological at a lower level. So, oil price at 120 is not good for the West. Now, it is true that economies adapt to these constraints. But the other thing that's been happening recently, and you've seen some stuff in the papers about packaged goods companies in particular raising prices to deal with commodity price input increases. If you look at the problems in the Middle East, what were they caused by? The higher food prices and youth unemployment. And I'm sure that the planners in China are very worried about inflation and maintaining price stability. I was at the China Development Forum a few days ago, and maintaining price stability is a critical issue. Is
there anything that you can gauge about how business is being impacted, and therefore your business is being impacted by the events of the Middle East and North Africa? It's too early. It's too early. I mean, if we have a business in Egypt that obviously was impacted by the regime change, but interestingly, in the contracts that we have, some of them continue, some of them were affected, but Egypt, in the context of things, is fairly small. Libya, Gaddafi's original reversal, which I guess Blair and Bush really didn't get as much credit as perhaps they should have done, had a major impact on North Africa, the Maghreb, Africa as a whole, and the Middle East, in terms of stimulating development. For example, Egypt, which had not been a particularly important economy from our point of view 4, 5, 6 years ago, suddenly became much more important, and you could say that for the same thing, Tunisia, Morocco. I mean, not big, but in fact that part of the world is roughly the same. I mean, Africa as a whole for us is about $500 million, but the majority of that is in South Africa. It's about 350 in South Africa. So I think it is worrying, and it's worrying because of the uncertainty. And going back to what I said, if you have uncertainty post-Lehman, and you have conservatism in terms of the way that people manage their P&Ls and balance sheets in the West, this is going to make them even more uncertain and therefore even more cautious. So I think the inevitable result of this is that growth in the West is going to be slower. Growth in India and China and Brazil and Russia probably, in a sense, is impacted positively because people will view the prospects and the growth prospects more positively.
I've been here, it's the usual thing, after 24 hours I'm an expert on India, but taking that with a truckload of salt, I would say the mood here, I mean, irrespective of India's amazing victory in the World Cup, irrespective of that, and that will have a positive impact, even further positive impact, irrespective of that people are quite bullish here, quite bullish.